Hello, welcome to the European Open Briefing for Monday, September the 18th. I'm Rafi Boyajan, currency analyst at XM.com, and we're going to be having a look at what's happening in the currency markets today. So the week has started off on a positive note with much improved risk sentiment, which was already boosted on Friday. The dollar is at a near 2 month high against the yen. The main focus this week will, of course, be the FOMC meeting. The two-day meeting starts tomorrow, and we will get the announcement on Wednesday. We saw the pound surging last week. It's holding near those highs as we're getting more and more strong signals from the Bank of England that the rate hike is possibly approaching. The euro is fairly steady. It's been consolidating for a while now. We've got the German elections coming on Sunday, and then that's not causing much panic for the euro at the moment, given that Angela Merkel's party is well ahead in the polls. The Aussie and the Kiwi are firmer this morning, notably against the Japanese yen. The yen is sharply down against most majors this morning, and oil prices are also near Friday's highs on the improving outlook for demand. But let's first start with the dollar. We can see dollar yen has been edging upwards since Friday, although on Friday we did have disappointing data. We had retail sales and industrial output for August, both of them unexpectedly declining during the month. The day earlier on Friday we had seen stronger than expected inflation data. But now dollar yen has managed to break above, has more than recovered those losses after the data, and it's currently above the 111 level at a near 2 month high. The dollar index, though, isn't as up as much. It's currently trading around 91.90, mainly because of the stronger pound and overall, and the Aussie and the Kiwi are also slightly up as well. But the main focus now will be, of course, the FOMC meeting. We will likely get an announcement on the balance sheet. They're likely to keep rates on hold. It's going to be important. It is September will be the one where we're going to have a press conference and the latest quarterly projections. So even though no rate hike is expected, it's going to be important to see what the FOMC members say about how many more rate hikes they expect both this year and the next. Let's move on to gold prices now, and here in this chart we can also see US Treasury yields. US Treasury yields have been rising both after that inflation data, which reignited expectations of another rate hike this year. We also have renewed hopes on tax reforms being passed this year, plus tensions continue to drop over North Korea. There were some fears that perhaps North Korea would conduct another test over the weekend, but it looks like that one missile strike we saw last week that flew over Japan, that was just a retaliatory move following the UN sanctions. We can see the yields on 2-year US Treasury yields rising sharply, currently at around 1.3886. Gold, though, has been drifting lower. It's currently trading near 2.5-week lows. And the risk-on sentiment has boosted stocks both in the US and in Asia this morning. On Friday, the S&P 500 and Dow Jones closed at record highs. And apart from the risk sentiment, the Japanese yen is also down on reports that the Japanese Prime Minister Shinzo Abe might call snap elections in October. That has also been weighing on the yen, so the yen is broadly lower against all major currencies this morning. Moving on to European currencies, the euro is fairly steady. We have the German elections of September 24th. This isn't we saw a number of elections causing some kind of bit of uncertainty early in the year, notably possibly the French elections and the Dutch elections. The German ones, Angela Merkel, the current chancellor, is expected to win, so that's not really causing much panic in the markets. And in the meantime, the ECB continues to signal that on the one hand they will be moving to tighter policy possibly in October, but that they will only be moving very gradually. The ECB's chief economist Peter Bright, in a newspaper article on Saturday, said that substantial stimulus is still necessary. So perhaps that is also weighing on the euro a little bit, which has not managed to test its previous high 1.2092. It's currently trading just above the $1.19 level. The pound, on the other hand, we saw surged higher both on Thursday and Friday. Bank of England signaled a rate hike may be coming soon, and the pound's gains were fueled further after the MPC's most dovish member Gerk-Jan Lich said that a rate hike could come as early as in the coming months, saying that the rates may need to rise more than once. So they're not just looking at the reversal of the emergency cut we saw after Brexit, and they may be looking to raise rates more than that quarter of a percentage points. The pound hit a post-Brexit high of about $1.36 on Friday, currently trading not too far from those highs at around 1.3549 at the moment. And also worth keeping an eye on is Theresa May's Brexit speech in Italy on Friday, and there is a potential concern that we might be seeing maybe a fresh leadership challenge. The Foreign Secretary Boris Johnson did publish his vision of Brexit in a newspaper article that led to quite a bit of speculation that he may be seeking to topple Theresa Prime Minister May, though that hasn't really had much of an impact in the markets just yet. And a quick look at the Aussie and the Kiwi. They're just marginally higher against the dollar, but they're up more than half a percentage points against the yen. We are seeing yield differentials once again increase between the Aussie and the Kiwi and the yen. We are seeing improving outlook for the Australian and New Zealand economies. We had a strong employment data out of Australia last week. The New Zealand economy is the government is planning increasing infrastructure spending and also planning tax cuts due to a big budget surplus. So we might be seeing potentially a rate increase in both countries at some point next year. The main focus for New Zealand will be the GDP data due on Thursday and the elections on Saturday. And although the Kiwi has been rising over the past couple of days, we could see some further volatility for the Kiwi in the coming days, depending on which way the polls go. If Labour makes more gains, it could potentially spell trouble for the New Zealand dollar, because the markets don't want Labour to win. Quick look at oil prices. Brent crude hit a 5-month high on Friday, and WTI managed to break about $50 a barrel. We are seeing many US refineries restarting after the shutdown from the hurricanes. This is supporting demand. We also had the latest oil rig count on Friday, which showed that the number of active rigs in the US fell for the fourth time in 5 weeks. Possibly suggesting that the US output has peaked for the moment. Plus, of course, we had both OPEC and the IEA raising their demand forecast, so all of that has been very positive for oil prices. WTI crude currently trading just about $50, and Brent crude at 55.63. It's going to be a very quiet day for the rest of the day. The main major data will be Eurozone inflation numbers, and we're also going to have a speech by Bank of England Governor Mark Carney at 18 hours GMT. He'll be speaking at the IMF in Washington. That's it from me. Thank you very much for watching, and have a great day.